Well, it was an interesting session on Wall Street. Of course, we did see stocks initially doing really well after some positive economic data, but then turning into the red on fresh worries about the escalating crisis in Iraq. Well, to get more on the session, joining us live now is Larry Shover, Chief Investment Officer at SFG Alternatives from the CME Group there in Chicago. Great to see you, Larry, as always. Yeah, just firstly on the latest data, because there have been a lot of concerns that maybe the Fed would be a little hawkish given the data we've been seeing last week. That certainly didn't happen, but I mean, when you look at this, that the housing data, again, new home sales overnight improving their consumer confidence, also beating expectations. When does the Fed need to start to move?
Well, I think it's going to be a while. I mean, but to be plain, I think right now what the market's looking for is just for Yellen to spell out that normalization of monetary policy. And I think we'll see some of that come August at Jackson Hole. I mean, but with today's action, it really has nothing to do, at least in my mind, with Yellen needing to be hawkish or needing to be anything. I mean, right now, we're coming up to quarter end, month end. There's low volatility, low volume. It's easy to push the market anywhere right now. And we just have had some significant run-up. So it's really just more about positioning and sentiment.
Just in terms of the inflation debate and some warning that maybe the Fed's behind the curve, some belief in that when it comes to inflation. Where do you sit on this? Because obviously we got that PCE number, that the Fed's preferred measure. Is that going to be the key event for this week?
Well, you know, it could be. I mean, if we get an upside surprise, I think they're expecting about 1.5. If we get an upside surprise, certainly that would help to justify the CPI number. I think what worries traders and investors is that CPI has doubled since October, and CPI core has gone up to about 2.1 at the same time. However, I think we're a long way away from having inflation in our market. I mean, people in the United States are concerned with gasoline prices and meat prices, but a lot of that's temporary. I mean, other than that, import prices are unchanged. There's still a significant amount of slack in our labor markets, and price competition is very, very fierce. So I don't think we had a big fear of inflationary pressure. However, if we do get an upside surprise on Thursday, there will be absolutely no shoulder shrugging in the bond pit for sure.
Obviously, there was a pullback today. Overall, though, I mean, how sort of significant do you think it is in the scheme of things? Do you think that the trend is still to, just inevitably push higher, that there's a sense of inevitability about gains on the market?
Yeah, Bridie, that's a great way to put it. And I think that sense of inevitability is like unmistakable. I mean, no matter if you talk to desks or traders alike, it just seems like it's prerogative that we're going to have to go higher. Now, that sense isn't as big as it was back in January after we had the huge run-up in 2013, but it's still there. And for me, that definitely is a red flag. You combine that with the fact of people being shrugging their shoulders over the second quarter earnings season and inflationary numbers. I mean, we're ripe to have a pullback. I mean, it's not fundamentals. It's just more position and sentiment than anything else.
Just in terms of some of the, I guess, stocks, I mean, is there anything cheap out there? Have you been looking in that financial space at all for value?
You know, I do trade the financial space, the equity space, but through groups. I don't trade individual stocks. And I think overall the S&P 500 is not expensive. It's just not. I mean, it's in that range of being not too cheap, not too expensive. We're talking about a 15.5 times multiple. That's okay. With that said, I do believe the long-term story is still financials and materials, maybe not the next month or 3 months, but I still think our housing story is a good one. I do believe our infrastructure in the United States is growing, and that's going to cause dislocations, which causes opportunity in the materials sector. So that's why I like both financials and materials.
Larry, always great to talk. Thanks so much for your time.
You're welcome.
Larry Shover there from SFG Alternatives.